First of all, thank you all for coming today. It's a great pleasure to have you here. I thought we could start off like in the last panel with a short introduction of yourself and who you're working for and what you do. We can start with you, Mattias.
Sure. Mattias Höggblom, work for Swedbank Robur, manage our global healthcare fund called Medica. Swedbank Robur, for those who don't know us, is Sweden's largest mutual fund manager. I think we have $70 billion US in equities globally. We're active managers. Half of our money, if not more, is globally invested. The other half is more regional. The healthcare fund is $1 billion, so it's a small fish in the sea. But we have healthcare across the vast majority of our products, so 10-15% of our assets are typically invested in healthcare. I'm a biologist by training. Ended up in the sell side, covering Nordic life science stocks for 18 years. Moved over to the buy side to manage investments 3.5 years ago, and happy to be here.
Thank you. Daniel?
Yeah, so Daniel Bolanowski, work for Arctic Fund Management and the life science fund Arctic Aurora Life Science. So we specialize in therapeutics mainly, highly diverse, differentiated and innovative therapies is sort of our niche, what we like to see in our investments. So myself, I'm a biotech engineer by training, and also a business degree, which suited me pretty well. Biotech from the standpoint of all the new technologies that has enabled a lot of new, very interesting clinical results. So yeah, exciting times for us.
Thank you. And Claus, you have been traveling from across the sea today.
Yes, my name is Claus Johansen from Danske Bank Asset Management. I'm part of a team. We have 16 people. We are investing in both European and global equities, and we have between 11 and 12 billion euros under management. And I'm the healthcare specialist, so I'm the guy who travels around the world and talking to doctors, visiting companies, and going to these conferences to meet companies and doctors and get deep insight.
Great, thank you very much. I thought we should start with talking about the Nordic ecosystem and the Nordic investor climate with a global outlook. Like you said, Claus, you travel the world and you go to conferences and so on. My first question is, what's the view of the Nordic countries in the sense of in a global competitive landscape within life science?
I think there's tremendous enthusiasm surrounding science coming out from the Scandinavian countries. I still think it's a bit overlooked. I think there's a lot of excitement and a lot of money flowing in the US ecosystem, but I think the money lacks a little bit more in the European and Scandinavian system.
And Mattias, like you said, you have a global outlook as well. You invest globally. What's your take on how well are the Nordics holding up in the global landscape?
Well, I think an event like this speaks for itself. You know, there's a lot of companies, there's a lot of ideas, there's a lot of entrepreneurs. The challenge most of us face, and I say us because we feel part of it, is the funding gap between US companies and European companies, not only Scandi-based. So a large US IPO is typically a few $100 million US. As a starting point for a Scandi-based biotech companies is vastly smaller amount than that. So that's the challenge. But the ideas, the number of flagship companies like Genmab, Sobi, Oncopeptides, a growing list of large companies that have been able to attract investors from a global base speaks for itself. The science is good. It's just that funding gap that is challenging.
Daniel, what's your take? Correct me if I'm wrong, but Arctic Aurora is Norwegian-based?
Arctic Fund Management is a Norwegian company.
Okay.
Arctic Aurora Life Science is Stockholm-based. That's our subsidiaries where we sit. But we are a global fund as well. So we look at everything from a global perspective. So quality-wise, there are quite a few, as Mattias mentioned, quite a few interesting names for us. We tend to invest slightly later when we see some clinical efficacy, for example. That's a sweet spot for us where we can perhaps be a little bit ahead of generalists, but we're not a VC company.
No.
there are a few opportunities, but there's also sort of a gap between the promising names, VC territory, and those that have come through, the Oncopeptides and the Genmaps, for example, that are relatively established and have at least $1 billion worth of market cap. Gap there, and capitalization is part of that issue, I think. So VCs are doing a pretty good job in discovering new interesting assets. We are probably doing a good job in finding the more mature ones in between there. Just getting companies into the next stage is challenging, and it appears to be easier in the US. There are more crossover funds that can bridge that gap.
So obviously there is like you said, it's a big difference between so in valuation, of course, but also in the capital flowing in the markets between the US and Europe, especially Scandinavian. So, but could you say that Nordic science or Scandinavian-born science is world-class science at a bargain price? Is that correct?
Quality-wise, I agree with you. Quality-wise, there's no difference. I think we're ahead of a lot of countries, region. Of course, the US is always going to be best in terms of quantity, so that you have so much things coming from the universities there. Per capita, I guess we're almost as good, but again, it's bridging that gap between good academic ideas and building successful companies. For all that matters, I mean, a lot of the interesting ideas in the Nordic countries, my feel is that they're actually picked up by pharma companies before they're even allowed to, be developed by entrepreneurs. So I think there's a lot of Swedish, Danish, Norwegian-born ideas that never make it to listed companies, for example, here locally. And we have a lot of good people that are active in the international pharma and biotech companies that are from here. So competence-wise, it's really good. We just need to be better at taking care of those assets and build good companies around them.
Claus, would you say that there's a difference if we look at, for example, Sweden and Denmark as two different countries? Would you say that there's a difference in between those? In how do we take care of the science coming or the ideas coming out?
I think that's a very difficult question to answer, how you actually do in Sweden and Denmark. But at least in Denmark, you have had some foundations supporting some very big companies like Lundbeck and Novo Nordisk. So they've had, let's say, some stability in the shareholder base to think very long term. And that could be probably the biggest, let's say, obstacle in the Scandinavian region, finding patient capital that are patient and that can take time and use that time to develop the right products and scale them up so that they can be commercially viable.
And then looking at the Swedish market, we have a fairly unique market here with a lot of retail investors, smaller investors that are happy to throw their capital into early science and early funding. Is that all? Is everything about that good? What do you think about that?
Well, I think it's certainly problematic, or could be problematic the day we're at zero interest rates around the world, and we've had no one remembers the last bear market, but there was actually one before. Some people don't remember that, but retail investor base is great, and I'd say the retail investor base has become much more sophisticated the last decade or so. There's so much information available, online and webcasts. Before you had to go physically and visit companies and to medical meetings. There's so much you can pick up online today. That said, the ability an institutional investor have to become long-term supporter, even beyond a financial crisis or what have you, should not be underestimated. The retail money, to some extent at least, will, if not diminish, it will be smaller. People will take out their money out of the stock market. So it's you have to start somewhere. If you don't find a VC, if you don't attract an institutional investor, what can you do? Well, you can start maybe with a retail support fund base, so to say, to do the proof of concept study or phase 1 or preclinical. But then most people here in the room and probably will start to look for larger pockets to accomplish more of their ideas, and that's challenging because just like the gentleman here next to me says, it's typically a starting point where, in terms of market cap, we prefer to invest due to liquidity reasons and so on. So it's difficult. You can see it from both points. There's no simple solution to it.
Did you want to add? Some of the major limitations with this sort of open market structure is that capital raises or secondaries seem to be very painful here, whereas in the US, even in these good times, whereas in the US, it's a normal part of the company, of say a biotech company's life cycle. You raise money and you do it all the time. You try to be opportunistic about it. Here, I heard dilution being mentioned in the last panel, and that's not usually. Never heard that as a problem in U.S. capital raises. You create value through the money you raise, and that's to the benefit of everyone, even those that are maybe diluted at a certain transaction. So hopefully you gain value when you lose your company share. That seems to be a harder concept to grasp here for some reason. No easy fix for that, but I guess you need stronger investors to be in that ride.
So there's a knowledge gap, you would say, in sort of the general process, how life science companies evolve?
I'd say it's a culture thing, but we're seeing progress here. 10 years ago, a biotech company could not raise capital overnight. They had to go through typically a fairly challenging rights issue process, not fully guaranteed, and the stock price went down 40% during that 3-month period, and no one gained from that. Whereas in the US, they bang overnight, funding is fixed, we move on, we create value. But we're starting to see more of that, those kind of pipe situations or overnight fundings, directed issues, here in Scandinavia as well, which I think is beneficial for the vast majority. There's typically a focus around dilution rather than value creation. Is the glass half full or half empty? In America, you typically in this sector see it as the possibilities rather than the downside from actions like that. But I think it's starting to change. We've seen a number of larger transactions that not have gone through the rights issue process. Not to say that we should not have rights issues, but there's opportunities for both. One size does not fit all.
That's true, and seem to be that having a direct issue, capital injection, is generally viewed as something quite positive, even here, if there is a good investor base going in. However, whereas the normal share issue, which everyone should expect actually, seems to be like a red flag for many retail investors as well, to dump their shares. So speaking of red flags, would like to know a little bit about you guys, what you consider to be red flags when you choose where to invest. Is there a common denominator which is like, okay, I won't go there? Daniel, you would like to start?
Oh, there are so many, but I mean, trying to look at it from the positive angle. As I mentioned, we like to look at stuff with a lot of innovation height. So if you don't have that, if you have a concept which is similar to what other people are developing, you might have an issue, especially if you're a small biotech company going against a group of large pharma names. They tend to cluster around these very attractive targets, and suddenly you have 5 new migraine drugs on the market at the same time that are doing almost exactly the same thing, for example, or the immuno-oncology drugs. So you probably don't want to develop a new PD-1 inhibitor as a small Swedish biotech company, for example. And then, have a pretty transparent process and with your investors and what you're doing, clear goals. Even if you would fail, and that happens, you can still rebuild companies. It's easier if you have money to do it. And again, back to to capital that you need injected. Just overall a very sound drug developing profile. For example, if you go into biotech and have good people with a sort of a global reach, not only local people. There could be very good Swedish, Danish, Norwegian drug developers, but there are also a lot of very good people around the world that can give advice. So we'd like to see, for example, international board as early as possible in these young companies to give proper advice on how to go at the global market.
Yes.
I have a simple rule. If I ever get into IR consultancy or so, I'll give it for free here. Under promise, over deliver. It's very easy to say, but it's difficult to execute on. So one of my red flags is companies who promise a lot, and when I meet with them 6 months or 12 months later, they've not accomplished anything on what they promised. That's not a good starting point of building relationships, and we're here for the long term. At Swedbank Robur, typically a starting investment for us is 3 to 5 year horizon. That's how we tend to think about, at least, we'd love to stay longer, but we're not in for the short term, like next quarter or next 2 quarters or so. So building relationships, starts with trust, and then you can't promise too much, rather under promise and then over deliver. And then, second point I make is I always get a bit nervous when companies are very explicit in press releases, but they never show up on medical meetings which are relevant for their therapeutic area where they operate. Because, in the end of the day, those who's going to prescribe the medicine, if it's a therapeutic, it's the doctors in that field. And those are the ones you're going to entertain and get on board. And the financial community is going to realize if there's a disconnect between that fairly soon. So those would be two my examples.
Mm. Klaus, any red flag?
I completely agree with Mattias. It's about relationship and building trust, and having, let's say, good relationship with the medical community. It's getting the right people on board and have a very open dialogue and very transparent dialogue with the investment community, because you have to deliver and you have to continuously deliver if you want to attract new money. So it's about building trust and delivering results.
So look out for the companies who are just going to the partnering conferences and not to the medical conferences. So when you are invested, there are situations where there are more or less binary outcomes. How do you feel about those cases? Klaus, you can start. Sorry.
We are, let's say, typical investing in companies with have profit and they are profitable. So we don't really invest in specific binary events, but we take it into consideration, and we do due diligence on, let's say, both the safety and the efficacy, and also let's say how it is being perceived in the medical community. So that's very important to get a feeling for how these results are interpreted. And we use, of course, a bunch of experts within the specific area. So it's really hard to, let's say, just boil it down to binary events. We don't do that. We do investment. So we have to have an opinion about if it will work or if it doesn't work.
Mattias?
Yeah, I mean, I sort of agree that if I could choose, I'd avoid any binary event, because I think they're typically, asymmetrical risk reward is typically not very favorable. If the shit hits the fan, stock is down 80-90%. If it's good data, it's up maybe 30-40%, but that may be a starting point for a few 100% of value creation. So, if I could prefer, I'd probably avoid binary events, but that would then have to mean that a lot of companies in situations that are not as mature, that we have seen, proof of concept data or so are never going to be investable for us. We tend to think that we have a preference for more mature companies as well, indeed. But if there's been a good, solid, well-designed phase 2 trial with a similar design into phase 3, I can be well, I can be confident invested. There was a US company, Horizon Pharma, with a drug called teprotumumab for an inflammatory fibrotic eye disease, which one of my few exceptions. Very solid phase 2 data published in New England Journal of Medicine. An overpowered phase 3 trial that I was one of a few times I felt very comfortable that the data is going to come out favorable, and it did, even better than the phase 2, which is an exception. But be prepared. An advice I'd give to investors in this field is that do a lot of work prior to the data outcome. Typically, companies are very transparent about their events that they're expecting in the next 12 months. So do the homework before, because then you have potentially an information benefit once the data is out to better judge if data is good and if not, rather than trying to run towards every fire there is, because there's always a fire. And particularly yesterday, we had a surprising event, aducanumab being filed for Alzheimer's disease in Biogen. If you didn't know what A-beta hypothesis was before, there was no way you could win yesterday, although we're not trying to win every day. But be prepared. Because once data is out, if you're better informed, you can make a better judged investment. It's my view. Mm.
Yeah, so personally, I like binary events myself, but there are a few sort of qualitative assessments, like Mattias mentioned, that you need to be confident in the read-through from previous studies, for example. And if you are, there's and you can do good job in managing a portfolio, but that's another important point. We're managing a portfolio, so we're not taking a single bet. And even with the best intentions, doing our best analysis, you can sometimes fail on these binary events. But if you have 30 such events, say over a year, and 1 or 2 fails, then hopefully the other ones will be successful. Hopefully, so far we've done pretty well. But it takes a lot of research. You need to talk to a lot of people. You need to read a lot. You need to understand the potential pitfalls. If you do that, then I'd say you can comfortably invest in binary events, but as long as you make several such bets, not single ones.
The classic, sorry.
I think the retail investor and also the professional investors just need to look at the probabilities ahead of a phase 1 that will, let's say, have a positive readout and will actually reach the market. That's only 1 out of 10 that will actually reach the market. So the odds, even though that you have good data, they could be pretty tough going forward and go into a phase 2 and to replicate the very good phase 1 data. So I would just advise investors and people to look at the data and then make up your mind and try to figure out how good are these data. But it's difficult.
It is for sure, especially if you're from a layman perspective. So be informed and spread your risks. That's a pretty much classic advice on that. So if we look ahead, I know that our future is getting short. It's only a couple of minutes left. But if you could each give me one of your insights into the future. Mattias, what's coming next? Trending technologies, for example.
Well, it's going to be very boring, but because it's been said before, but I think what's happening in gene therapies is actually quite interesting right now. We had the first quarterly sales for Novartis Zolgensma, a gene therapy for SMA, a rare disease, but with a devastating outcome that until a few years ago was not treatable, and now they have very promising data. They sold for $160 million first quarterly sales. I think consensus expectations was $100 million. My point being, this is not only working in theory, this is actually working commercially, which is critically important if more money is going to flow into this field. So, there's a lot of interesting stuff going on in gene therapy. I think that would be my sort of boring because it's not unique, but it has so many applications. Given that it happens in parallel with our better understanding for genetics and disease targets, so that Plus, I throw in another one, brief one. The US drug pricing in particular is probably not sustainable. So, companies need from day one to think about their pricing strategy, because, we thought it was just a tweet by Hillary Clinton back in August 2015, and there's still 4 years later an overhang around US drug pricing that is not benefiting a lot of the biopharma companies in the US. So think about your pricing strategy early on is probably my advice there.
Thank you.
So I'd like to make a pretty bold suggestion and suggest 2 therapeutic fields that are considered historically very difficult, very expensive, especially for small companies to develop drugs in. That's cardiovascular disease and central nervous system disorders, which has been, almost dormant. A lot of big pharma companies shut down their R&D operations in these fields. And suddenly now, with new technology, like Mattias mentioned, in our gene therapy, RNA technologies, suddenly we're starting to see that even small-ish biotech companies can do cardio drugs and CNS drugs, which is very exciting because we need new innovations in those fields. Those aren't mentioned a lot. We still, and rare diseases is going to be massive in terms of what they can do for patients. In SMA, that's like going from 0 to 100 in treatment effect almost. And credit to Biogen, by the way. Their earlier drug in SMA now is starting to show really interesting results. If you can treat these kids from almost at birth, you're almost at, getting these kids that will live until 2-3 years old now suddenly develop like normal children. That's a huge progress.
That's fantastic. Klaus, any final?
I completely agree with gene therapy, and I think I'm also looking forward to some allogeneic stem cell transplant in myeloma, for instance. We will probably have data within the next 12 to 24 months that could be pretty interesting. We have CAR T treatments today, but that could actually revolutionize the treatment. I would also look into specific antibodies. We'll see a number of data coming out the next 12 to 15 months, and we'll see how they work from the efficacy-wise and also safety-wise. So that's going to be pretty interesting.
So that's a number of tips for all of you out there. It's been a pleasure having you today. We could have used more time, but I guess if anyone want to try to ask you some questions about your strategies, they can do that in the break later. Okay. Thank you very much. Let's give him a warm hand.